Hey guys, it's Alison Creamer, and I am here with one of my most favorite lenders. Well, now I call him friend because it's been about 6 years. We're here with James Walrod with Veterans United, and we are, let's say, the first work week of 2017, huh?
Yep, 2017, it's here.
How's it going?
Great.
I know. We already had 2 closings this week, and I think we have 5 more set up.
We have a very busy January and a couple things happening in February, so I'm excited about 2017.
Much different than 2016 January. I think it was a lot slower for me last year.
Yeah, it's definitely a different year. We see a lot more activity. I think 2016 at the end of the year was really strong, and it just seems to be carrying on into the new year.
Mm-hmm. So we, before we started this, we kind of tried to think about what would we talk about this year. James is going to attend as a regular person on the podcast. So a couple times this year, we're going to come back to him and see how the market is moving and changing. But we are at the very beginning, and of course, we all have a new administration coming into the presidency, and I personally feel like I've seen changes just from the potential of what could be coming down the pipeline. Some of those are positive, some of those are negative. I recently hired James to do a refinance on my own personal house, which is putting friends and business together. But if I'm putting my money where my mouth is, and I refer James to all my clients, I decided, you know what, I'm going to use James for that. So with that being said, one of the negative changes that I saw is my interest rate was a little higher, not bad, still well under 5, just a little over 4. But I remember hearing that 3s and, so we've seen some changes in the interest rate.
Absolutely. We enjoyed for about 3 or 4 years interest rates that began with a 3. And there was a few times over that period where they, hit 4, and then they would kind of creep back down to start with a 3. So mid 3s and upper 3s. There was periods of time where we saw interest rates in the lower 3s. And they have changed. And there's a couple of factors behind that. One is, with a new administration coming in, we've seen some really great things happening in the stock market.
Which is good.
Which is good.
It is good.
It's great for some investments on one side, but it does drive mortgage interest rates up a little bit because of the effects that has on the bond market. Also, the Fed has talked about raising some interest rates. They actually raised it by 1/4. And what that does is that just makes the money more expensive for the banks to borrow. Mm-hmm. So if it's more expensive for the banks to borrow it, and that's not just for mortgages, that's for a credit card, a student loan, a car loan, a personal loan.
These floating interest rates and stuff.
If it's more expensive for the bank to borrow it, then it becomes more expensive for the consumer to borrow it.
If you know off the top of your head, say if you've borrowed $100,000 and 1/4%, what kind is that, like $20 a month or $10 a month? What's a rough? Can you tell?
Yeah, it's not going to make or break you. You're talking probably $20, to $30 a month. So that's kind of the message I want to make sure is out there, that rates are actually still historically low and in a really good place. So if you were hoping for that, 3.875 and you've got a 4%, it should not hinder you in any way from feeling like getting into the real estate market.
It might be 2 Starbucks coffees that you can't go get.
That's exactly right. And then, the flip side, the positive side is, as those interest rates go up, that's more money that's going into our economy, which hopefully grows things. Hopefully it means that our wages also go up and kind of follow that trend. So the idea is we want to strengthen the economy, and we want the Fed rate to be a little bit higher and not at 0, because there are benefits to where we save our money as well.
Yeah, exactly. So with that being said, I don't want to scare people saying the rates, because it ultimately comes down to what is your payment, what you can afford as well, because interest rates reflect tax deductions as well. So there's a lot to this financial mathematical equation. But where I do want people to understand is, I do think that we are going to come into a world again where 6 and 7% interest rate is reasonable. And if you're looking at doing a refinance, or you're looking at doing a purchase, and you're a 5, 10, 15, 20-year kind of buyer, this is really, you might want to grab these, because as we can see positive improvements just at the potential of what could happen, who knows a year from now if we won't be closer to 5. if things continue on the shift that they're going?
Sure. I've been doing this for about 10 years now. And I remember when I kind of first got into the business, rates were in the mid sixes, and people were happy to get them. It was actually a really great environment. And then with some different policy and things that have happened over the course of several years, they definitely went down. They went down into those threes, and then there's that natural ebb and flow for them to go up and down. So certainly still an absolutely excellent time to purchase a home or refinance a home. There's a lot of great opportunities out there right now.
And we have been saying that for a long time. I think, like we just said, there's a lot of pieces to this equation. If the rates rise, you may make more money on your investments. If the rates drop, you're going to make less money on your investments, but may be able to purchase more because the interest rate is lower. But, you kind of have to look at your whole picture. But I know for us, we decided to refi because we know we're going to be in our house at least another 10 or 15 years. We grabbed a couple other debts that had higher interest rates and put them all together and extended that mortgage back out to 30 years and lowered our price, more than half or 2/3 of what we were paying monthly, which gives us some flexibility. So, James, you do refis.
Absolutely.
And you do new purchases.
Absolutely. Yep.
So he can help you on either of those. Another thing that I hear a buzz about is all the new construction. I didn't focus on just our particular area, but nationally, new construction is booming again, where I think a few years ago it kind of pulled back because of the cost of materials. But with new construction rising, and we still have a lot of builders around here, we were talking about whether or not if the new construction opportunity is getting out of somebody's ballpark because supply and demand, builders are going to be able to raise those prices. We may see the resale market shifting up again too, where people can, decide to buy a resale house because they don't want to wait around or pay the new construction prices. Are you seeing anything in your industry with resale compared to new construction or?
Sure. New construction is a great indicator of a couple of things. One, it indicates that we've got a healthy housing market. Builders are not going to go into a new community and build new homes if houses aren't selling and if it's not a good investment for them. So it's a great indicator that it's a good place to buy a house when you know that there's some smart developers that are doing a business plan and saying, hey, let's build a group of houses.
We're willing to take the risk because we know we can sell them.
Absolutely. Also, it's a great indicator of the economy. Those folks that are building those houses, they're taking loans out for that kind of stuff. They're buying materials. They're hiring contractors. They're buying land. They're spending money and creating some jobs for folks, which is a good thing for the area. Specifically for a home buyer, what that means is you got more choices in the houses that you want to buy. So you take a look at a couple of new construction houses, you take a look at some existing neighborhoods, you kind of weigh all those important things that are for you. But when you have more choices, of course, it helps you to make a better decision and find a better fit. So I'm encouraged by hearing that new construction is healthy right now.
Yeah. So the last thing that I want to ask you about, because, we all have our little good old boy water cooler conversation. I know here in our real estate office, we are definitely seeing, at least even in my own personal business, the uptick in activity. We're watching the people driving traffic to our websites. It's the beginning of moving up to the mountain, when it comes to our selling season. So in your office, are you hearing lenders are taking more applications? People are starting to seek out what's the rate, getting pre-qualified? Are you feeling it starting to jump?
Yeah, we've had a really busy first week of 2017. There's a lot of people that at the end of last year said, hey, I want to get back with you at the end of the year. And you wonder, are they going to get back with me and are they going to get serious after the holidays? And almost all of them have given that call and said, hey, we're ready to kind of research this and start talking about this for sometime in 2017. So we are definitely seeing a lot of folks interested in purchasing homes. As the interest rates tick up a little bit, it doesn't always make sense for everybody to refinance. That's something that everybody's situation is different.
Well, like I said, if they're going to be in the house longer, that's what we did. We said, okay, it's going to cost us $2,000 essentially to do all the process, but we're going to lower our payments. And by the time we feel that cost, we're ahead of the game.
Absolutely. I think you guys recouped your costs in like less than a year, so it was kind of a no-brainer. But yeah, the refinance piece is still there. There's a lot of folks still interested in that. They want to either consolidate debt or just lower the monthly payments that they've got. But we're really seeing a lot of folks that are interested in owning a house for the first time. I think they've heard over the last several years from their colleagues and their family, hey, we bought a house, we love it. We did some taxes and got a break from that. And they're starting to think, you know what, we can do this too. And we want to talk to somebody about the financing piece and an agent who can help us find the house and really make that investment. So we're seeing some positive activity.
I feel like people start this process, and I agree with the statistics, about 4 to 6 months before they're ready to pull the trigger. They start these conversations. They go on Trulia, Zillow, Homes.com, Realtor.com. They're looking out of curiosity. So a good lender and a good agent continues to maintain that relationship for a good 4 to 6 months, knowing that that's just future pipeline and building relationship. And I think that's why you and I work so well together, because we constantly stay on top of these inquiries, and we let them know that we're there for them. You've got a question, you're driving a neighborhood, you want to run some numbers, please reach out to me. I'm more than happy, to answer those questions. I'm recently working with a family member who sought out a couple other agents before she came to me, just because, family, and just had terrible experience, with somebody who's only wanting that 30-day buyer. They only wanted to work with somebody who has a loan and they're ready to buy right this minute. They didn't want to have the relationship building, process. So whenever I get that first phone call, I really kind of feel like, okay, in 4 to 6 months, we're actually going to do something.
Yeah, you and I are both in this for the long haul, so I have no problem with qualifying somebody 6 months ahead of time, because there's a lot of great things about that. We can talk about if you need a down payment and how much that would be, and you can kind of prepare for taxes or a savings plan to get there, or talk about a gift, or just however those different options are. If there's something on the credit that a lot of folks have great credit, but there's some funky collection or something that they didn't even know was on there. Mm-hmm. And we can help to get that stuff cleared up for them, so that in a few months when they're ready to buy, we have them in the absolute best position to make that big decision and purchase that house. So I'm happy when somebody reaches out well in advance, instead of calling and saying, hey, I'm in the driveway and I love it. Can we talk about a loan?
You never want to be the bearer of bad news. You want to be the bearer of options and opportunity.
That's exactly right. And then, there's a lot to this, and you and I are the experts in the field. And so as they take more time to understand what they're getting into, they're going to have better questions. It's going to be a great conversation that we can have as they go forward, and we can just earn their trust over that time. And that's really what we want to do, is make sure that when they're ready to sign on that, sign off on their house and buy it, that they are sitting there with a smile on their face and saying, thank you so much. You really helped us get into a great position.
Yeah, I agree. Well, please, if you have questions for James, we're going to have him on the show as a regular interview. You can also reach him on Facebook. You can reach him via cell phone. We're going to have all your contact information at the end. We're also going to have your NMLS number attached. And if you have any questions, you can also text me or email me through the blog website. So thanks for coming in.
You're welcome. Thanks for having me. Happy New Year. James Walrod, Veterans United Home Loans, NMLS number 260324.